morning and welcome to VSA 5-minute reminder on what I suppose is deemed as the Boxing Day of the budget. It's the day after the budget. It's when you throw away all the wrapping paper and there's a little bit of sort of cold turkey in the fridge, and that's what we're all suffering for. Anyway, I'm back from my travels. Morning, Paul. How are you?
I'm very well, thank you. Very well, thanks.
Good. I had quite a trip actually. Obviously, I've been out in Dubai at the Dubai Air Show, and then in Hyderabad with a big investor of ours that's been putting money into quite a lot of companies. I've got to say, I was flying around all over the place, quite a complicated flight. At one stage, I thought I'd end up picking up bananas in Afghanistan, but I didn't. Don't worry. I just did Hyderabad, Dubai, Doha, London. Anyway, also just whilst talking a few its and bitses, no 5-minute morning reminder tomorrow because all of the team are out busy doing things. We're seeing companies all over the shop, just so damn busy. Anyway, Paul, right, here we go. The mining boom is still on. That hasn't changed whilst I was away. Let's kick off. There's a couple of things actually over in the TSX, our clients that came out, I think yesterday, we was just catch up on. Let's start Myriad Uranium.
Yes, that's right. Myriad Uranium had made an announcement that they had completed a geophysical airborne survey on their Red Basin project out in New Mexico. Red Basin is a different kind of uranium deposit from that they have in Wyoming. The New Mexico deposits of uranium are the conventional sandstone roll front hosted type geology where it's permeable units which contain uranium and typically are developed in the southwestern United States by in situ leaching as opposed to open pit mining. They can be open pit mined from a mining standpoint, but their grades are such that usually the ISL method is the more profitable, less environmentally sensitive option in order to produce them. So this survey will be used in order to determine try to determine to some resolution what the actual course of these sandstone channels might be across the property as far as selecting drilling locations.
Okay, and also over at Avino, one of the four Mexican gold and silver mines that I visited on my trip last August, they've had a renewal of their ETM program, haven't they?
Yes, they have. This wasn't any particular change from what they had planned before, but the key point was that they wanted to make sure they extended it in order to meet the regulatory requirements that notification is made to shareholders, because they do have sundown date clauses within those documents as they are released. So this is just a regulatory compliance issue, I think.
Yeah. Also, actually, just talking sort of general stuff, by the way, I don't know if you mentioned it whilst as well, but the tungsten price has gone absolutely ballistic, now up to sort of 780. And we have obviously talked a lot about EQ resources in the past. I noticed that EQ resources now hit 6 cents. So it has doubled in the last month. And obviously with the one that we follow over in the UK, of course, is Tungsten West. It'll be very interesting to see what happens there. Clearly, in the budget yesterday, what became quite clear was that the government actually has woken up to what's happening down in Cornwall and Southwest, and money is being put that way. And I think there's another critical minerals document to come out that will highlight things like this. And so I think that, we've talked a lot about Cornish mining on this podcast, but 2026 I think could be quite spectacular for the whole sector. Obviously with Tungsten West, the convertible loan notes, which sort of swamped the equity, are due for conversion at the end of this year, so they're only a month away. It's a very complicated situation, and I won't go through it here, but it's obviously how they convert, if they do convert, that is going to determine the share price. But just watch out for Tungsten West. It's going to become very exciting as we head towards the end of the year, whether it shoots up or shoots down almost. Okay, sorry, back to news, Paul. Why don't we have a quick chat? Andrada Mining, which is the Namibian tin and lithium mining company. They had some interims today, which all look sort of fine. Needs a little bit of a kick, I think, to really get it going. But what's your comment, Paul?
Yes, I think that's a accurate way to put it. I would say. Thank you, Andrew. They have had improved production output here. Tin concentrates up year on year by 14% to 858 tons. Total ore processed was by volume was up 10% year on year to five and a quarter excuse me, five and a quarter thousand 100,000 tons. And they have had an increase in their tin price as well that they received to $33,154 per ton, which is a nice 2,000, almost $2,000 increase on a year-on-year basis. So the net loss of the firm has come down um, by 6% to 3 million sterling. I guess for me, it's a little bit of a surprising situation that they are still in a operating or net loss situation with all-in sustaining costs around 24,800 per ton. They will also have some lithium news out from their Lithium Ridge project there in the immediate area for to be significant as far as a DFS study during 2026. So obviously making improvements, but I would like to see things going a bit faster.
Yeah, it helped a little bit. You said they were getting $33,000 for their tin. We're just shy of $39,000 now, so that'll help them a little bit. Actually, also the copper price is perking up quite strongly at the moment, and the silver price is perking up quite strongly at the moment. But I think everybody knows. I think we're in a mega bull market for commodities. Okay, that was Andrada mining. Which others? Do you want to talk a little bit about perhaps Pan African resources?
Yes, Pan African Resources had actually done a PFS level study on their group's Soweto tailing storage facilities, which came as part of the Mintails SA transaction back in 2021. This is a 108 million ton resource of tails grading at 0.28 grams per ton. They had two options that they're studying as far as this level was concerned, concerning their uh, MTR existing facility, whether to expand that facility with a circuit or whether to put in a 1 million ton per month treatment. A CIL plant with it, and the PFS is steering toward 600,000 tons per month module expansion, essentially, of the MTR. They expect it to produce about 30 to 35,000 ounces for about 15 years and an all-in sustaining cost of shy of US $1,200 per ounce. So the post-tax IRR across these gold price assumptions they used would be between 27 and 40%, and payback periods at no more than 3 years, depending on those price assumptions. So just goes to show that even at these very, very low grade tails, numbers and where you can expect only about 50 to 60% recovery on retreatment, they still make good money now.
Yeah. Okay. So there's a few. We are getting a little bit long here, but just quickly, there's a few other things that actually we ought to just comment upon. Trading's resumed today, hasn't it, in Anglo Asian mining? But also they've sort of announced that there's a potential offer on the table, haven't they, Paul?
Yes, that's right. And that's why there was a trading halt yesterday, as another London company by the name of ACG Metals had tipped that they are specifically looking at Anglo Asian for a possible merger. But other than that, they can't make a whole lot of concrete statement from either party at this point.
Yeah. And Greatland Resources has put a little bit of an update. It looks pretty positive. There's a lot of people are playing in Greatland Resources. Quite a popular stock. What's that one, Paul?
Yes, that one was an update on their underground drilling program on this satellite deposit underneath and at depth, their Telfer mine operation in Australia. Some real good widths and grades here: 56.6 meters at two and a quarter grams gold and 1.26% copper, as well as 82 meters at 1.9 grams gold and 0.31% copper. It's intended that fuller drilling out of this body will result in an MRE, maiden resource estimate, in March of next year, and it will add to the mine life there at Telfer.
Okay, and let's just very quickly finish, Paul. Metals One's just made a $1.8 million strategic investment in Lion Bay Resources.
Yes, that's right. That seems to be a program where they're trying to get more and more of a position in Lion Bay. Lion Bay, part of Lion Bay Capital, which is a TSX listed firm. So watch that Metals One news as it unfolds in coming press statements.
Yeah, okay. And actually, just very finally from me, just to note, Premier African Minerals have raised another £500,000 at, well, frankly, rather a low price of 0.0575p, which is actually 869 million shares. There's still trying to get that Zulu lithium mine going. That's probably enough on that one. Very good, Paul. That'll do. We won't be back, as I said, tomorrow. Everybody's out and about visiting companies and things. But we'll be back on Monday. Thanks.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.